All right, so people are trickling in. Uh, hey, everybody. Thanks for being here. We're just going to wait for a few more people to join, so we'll get going in just a minute or two. So just hang on, but thank you for attending our webinar on New York State investing. So we'll just give it another minute, and then we'll get going. And people are trickling in now. It's bit by bit. Okay. See if there's looking at the names, familiar ones. Okay. Oh, good. Oh yeah, lots of familiar names are coming in. All right, just let's keep let's go. Just just another few seconds as the names pop up. Great. All right, we're going to get going. I'm sure more folks are going to arrive. Again, hi, everybody. I'm Ken Rother. I'm part of CREA, the Cornell Center for Regional Economic Advancement, and the director of Rev. So thank you for attending our panel today on investing, and specifically investing with New York State investors. So I'm going to, it's great to see some familiar names on the list, and I know some of you are very close to wanting to raise money. So great to see you here. Good to see some names I don't recognize, to get some new people in the room. So I'm going to start by asking each of our guests to introduce themselves and say a few words about their fund, because what we have here today is three very, very different funds. So I'm going to start. Marty, how about you kick things off?
Sounds good. Tend to be on the front end of funding, so great idea. I'm Marnie LaVigne, President and CEO, co-founder and fund manager for Launch New York. So Launch New York itself is a private nonprofit. We're a 501c3 known as a venture development organization. So what that means is we provide pro bono mentorship paired with access to seed capital. So since all of you are so interested in funding, and I see a lot of familiar names, folks who generate deal flow, maybe some of our portfolio companies, but also some of our investors. So Launch New York has created this sort of unique community in the country in terms of a venture development organization offering a variety of funds. So we operate with nonprofit seed fund and also for-profit funds, plus an investor network that is a deal-by-deal opportunity for investors to support startups in upstate New York. We are exclusive to investing in upstate New York, and a little alert that we're expanding into other parts of upstate New York. So we're excited about that opportunity to support even more companies. The funding that we provide, we are very firmly in the seed stage. So often companies are maybe even pre-seed, so pre-seed, seed, maybe approaching a Series A. So our fund is very much dedicated to being first money in. We will often lead the deal, and we are generally going to be the first institutional investor that companies have received capital from, though they may have had friends and family, perhaps some other angel funding prior to Launch New York.
Cool. All right. And everybody, if you have questions, please put them in the Q&A platform, and we will try and get to everybody's, but we'll see how that goes. So, Somak, how about you next?
Sure. Thank you so much for having me, Ken. It's a pleasure to be on the panel with all of you, Marnie, Jennifer, and team. So yeah, Armory Square Ventures is an early stage venture fund based in upstate New York. I moved to upstate New York in 2013. I previously spent many years in New York City at venture funds like Tribeca Venture Partners, Edison Partners, and two tech startups, a company that was acquired by eBay called Shopping.com. So we consider ourselves an optimism engine for regions like upstate New York that have historically been neglected in the past And we specifically focus on leading seed and Series A rounds in B2B software companies. Those can be B2B SaaS or B2B marketplace technology companies. Those are the typical business models that our companies pursue. And we get involved at the early stage, but not usually as early as Marnie. So we're generally focusing on companies that have a working prototype of a product, might have a few customers even piloting the technology by the time we invest. And we really like to focus on companies where we can truly leverage our networks to help in two specific areas: talent and downstream capital. So, some of our more successful companies and earlier funds include ACV Auctions in Buffalo, Bento Box, a B2B SaaS platform in the marketing automation tech place for the restaurant hospitality industry. And we're excited to now be actively investing out of our third fund. And our team has grown too. We can talk more about it later. We have a team of 8 people, including half of us, who are based in upstate New York. So yeah, delighted to be on the panel, and thanks for having me.
Awesome. So, Jennifer?
Great. Good morning, everybody. It's great to be here. New York Ventures is housed within New York State and the Economic Development Agency for the state of New York called Empire State Development. And our mandate is to really help the economy of New York State. And my role within that is to make sure that we have, we support the innovators and the entrepreneurs to be able to access the capital that they need for the high growth companies, on their journey across New York State. Although I am in Ithaca, based in Ithaca, in spite of the picture behind me. I put that up because we cover the entire state of New York, and that's an important part of the work that we do. So our lens is to fill in the gaps where we think the private sector may not be getting everybody fair access to capital. So in that, we're kind of a social, like an impact fund. We consider ourselves to be more of an impact fund where we're looking to invest in diverse founders, as well as those in geographies that are less well served by the capital markets. We also are strategic in the way that we think about the investments that we need to make relative to the things that we think are important for the workforce, as well as for the state generally. So our sectors are based on that. So climate and clean energy, life sciences, healthcare, computing, agriculture, and social impact technologies. Our portfolio is on our website if you're curious to see what kinds of things we invest in. But and our investments range everything from $50,000 pre-seed seed check up through Series B. So our maximum check that I think we've ever written is a $3 million Series B check into a fintech company in New York City. And we also try to help the ecosystem by supporting fund managers and accelerator partners as well. So we're investing not only in the entrepreneurs directly, but we're also trying to make sure that we diversify the base of other investors that are available to support companies across the state.
Thank you all. So, I think a lot of folks who first time thinking about raising money, first time entrepreneurs, or, first time founders, people think about as investors as this kind of homogeneous group, like investors or, venture capital investors. And clearly we have, 3 very different models here that invest at different stages, but also have very different processes. So I'm wondering if I could ask each of you to talk a little bit about, how you source and then diligence an opportunity. So Marnie, I'd like to go back to you. If you could talk a little bit about where your deals come from and what does that process of diligencing look like? Because I know for Launch, it's quite unique.
Sure. So in fact, we have a very broad net that we cast, and we are sector agnostic. So what we're really looking for are scalable businesses that can reach 10 million in annual revenues by years 5 to 7. And they need to be, as we've discussed a little bit in the chat, about the location in upstate New York. So with that, we start, as venture development organizations typically do, with a mentorship phase So when companies, if you were to go to launchny.org, you'll see an application and sort of an eligibility checklist that's quite short. We need a business lead. We need to have the scalability, even if there are little or no revenue when companies are coming in. So we're really looking for companies everywhere and anywhere. And in fact, our goal is to introduce this notion of a scalable business pathway for entrepreneurs as a sort of a comparison, if you will, or a contrast to what you might see at a typical small business development center. So we have an entire cadre of dozens of entrepreneurs and residents who are at events, who are doing webinars like this, who are out at the coffee shops, who are, helping us do our outreach. We've actually finally, as a nonprofit, started to take advantage of free Google Ads so that we're able to get the word out both digitally and in person that we're open for business and we're here to help those who are thinking about and pursuing a high growth potential business. I absolutely want to emphasize that we are especially geared toward making sure underrepresented founders have a chance to get into this pathway, what I call on-ramps. So we actually have a special mentorship program called Founders Go Big that allows our folks to come through the door at an even earlier stage. Generally speaking, when a company is going to come in for our funding, they have worked with our mentors for at least 3 months. So that is really part of our due diligence and vetting phase, as well as our business support. So it's a bit of a blend, if you will, of the vetting process, the due diligence process, with business model canvas, lean startup principles-based mentorship. We provide that at no cost to the company. And depending on which sector they're in, we will also surround them with additional resources as needed to help them get some deep subject matter expertise. So all of that is in service of getting this company to be investment ready. So we're getting them ready to be able to pitch. So all of us are very used to seeing pitch decks and listening to pitches. But really having that scenario where the company's ready, not just for Launch New York, but for other funders. And we highly encourage that these entrepreneurs are interacting with all the different programs going on in our region. There's so much happening for little or no cost typically to these companies. The vetting process at that point, when they first apply, which is actually done through their entrepreneur in residence. So there's no application process in Launch New York for your pitch deck and for you to show us your fundraising. That is something that you work through in an intake call, work through mentorship over a matter of 3 months and sometimes much longer. And then your application comes in through your mentor, who is your very first advocate on behalf of Launch New York. At that point, you're really moving into a more typical VC vetting process and due diligence. However, we fully appreciate that that's more on the order of 10 to 15 hours for these companies who are very young, often don't have any contracts in place, versus a company who's more well-established, where you're talking probably triple that amount of time. That actually leads the company to have materials that prepare them to pitch every Wednesday, or every Thursday rather, in our 3 to 4 p.m. webinar-based pitch session. Ken Rother is one of our terrific investment committee members, among nearly a dozen who've been donating their time for literally years to help us do the pitch session and make a decision at the end of that webinar to fund or to ask the company to do some more work before coming back in for reconsideration. So our vetting process does follow what a VC is going to do. It helps the company set up a data room, but we also appreciate that we're teaching the company, often teaching these entrepreneurs how this should look, what they're going to need to attract not just our capital, but capital from others as well.
All right, so talking about capital from others as well. Somak, you're sort of situated in the B2B space. You've had some good success. Congratulations. So what does your diligencing process look like? Actually, talk a little bit about your sourcing process and your diligencing process. What does that look like?
Sure. No, happy to. So, I think sourcing is the lifeblood of venture capital, PE, angel investing. At the end of the day, we all care deeply about helping our company scale, but you have to be in the game and you have to be able to, find the best opportunities and select the right opportunities. So for us, sourcing involves spending a lot of time proactively, reaching out, meeting with the accelerators, the incubators, the universities, all across upstate and New York State. So I think this audience is probably too young to know the Johnny Cash song, "I've Been Everywhere," but I think that's a song that really applies to us, like in terms of, what we do. Typically on any given day, one of our team members is in, Buffalo, Rochester, Ithaca, Syracuse, and other cities, really trying to find diamonds in the rough. So what we do is we've got a lot of companies that are in the top of the funnel. I'm looking actually just at we were just at a funnel meeting yesterday. I can tell you, like, we saw in 2023, 1,762 opportunities. Of those, like, just to give you an understanding how a sales funnel works for us sourcing, 76 went to partner meetings, 17 went to IC, and about 1% kind of hit term sheet stage, and hopefully a good chunk of that will become portfolio companies. So that just shows you like how it's important to see a lot of things and also focus on both quantity and quality. We have weekly, I just got off a call just this morning with my team, which is our weekly pipeline funnel meeting. And what we do there is we very quickly try to understand, is this something that would merit a partner meeting? And we score them even before we meet, and we try to remove all biases so we don't have other people saying, well, what does Nina think or Pia think or Michael think? We all fill those out independently before we decide who we meet with. And then once we decide to have a partner meeting, there's really, going to your question about diligence, we very quickly determine whether this is something that would involve a broader partnership for a potential investment diligence process to get to term sheet, or is it too early, in which case it's a monitor. But when we look at the key things that ultimately allow a company to get through our diligence process and proceed towards a term sheet, we have a whole series of criteria that you can look at on our website. But really, the most critical things for us are really three areas. There's the market itself. Is it a large enough total addressable market? We usually like to see at least a bottom-up market of 500 million, but with a bigger fund now, we generally look at $1 billion plus on a bottom-up basis, and happy to answer questions about that later about how we do the market sizing, right? There's the team, and for the team, we're looking for the right blend of business expertise and technical expertise. We always like to have teams who are ultimately truly teams and not a solo founder. And we love to see a technical co-founder who has experience as it could be a player coach and really help build a code base, but also grow a technical team. And then there's a product market fit. That's the last part. And that's what I find the most fascinating part of my job is where we focus on our stage, which is primarily post-seed Series A. When we're investing, we're not investing, again, as early as Marnie and you guys at launch are, but we're still quite early. Most of our companies, when they do have revenue, when we invest, maybe have a few $100,000 in revenue and maybe some pilots, right? So the real exciting part for our business is looking at your pipeline and looking at the actual market signals through our broader network. If you look at our team page, we've announced a whole new set of advisors who are all LPs in our fund who have deep functional expertise in a variety of industry verticals. And so we're trying to understand, is there a pull? It may not be actually indicated in the numbers yet in terms of revenue, but there's something that's really, really saying, okay, this is a must-have versus nice to have. And if it fits those three criteria, we then really try to make the diligence efficient. What we try to focus on is a combination of customer references, personal references. We spend a ton of time really trying to create a composite of who this founder is and what their underlying motivations are, and then market and technical diligence, and the whole process from getting to a term sheet to a close. We've done it in as little as 3 weeks. It's typically 4 to 6 weeks based on really often legal, and that's an important thing for all you entrepreneurs. Make sure you have the appropriate legal counsel so that your doc's in order. But that's a high level summary of our sourcing and diligence process.
Awesome. So Jennifer, you run the fund for the state, and you talked about also trying to make sure that groups that may not typically get access get access. What does your sourcing look like, and how do you go about that diligencing process when you are the funding agency?
Yeah, so I think one thing that's different about Marnie and Somak and what they do is that we don't typically lead, or we don't ever lead an investment, I should say. We come in to
Actually,
provide.
I'm going to interrupt you for 1 second. Could you some new people on here. So could you explain the concept of leading, like what's a lead and what's not a lead? Why don't you give us that little, yeah.
Yeah, a lead investor is the one who gives you the term sheet. They're the ones who, plunks it down on the table and says, here's what we're willing to give you. Here's what it will cost relative to the terms and the equity or the position that we want in your company. And getting to that lead is pretty critical for most all founders, because that allows you then to drive the rest of the round. I think everybody here is more of a, we syndicate deals a lot. And so that means when we syndicate deals, we work with other investors to help fill in the round. We're not usually the only, there are some venture capital funds out there that will be the only check. And they are the lead and they give you one check and that's all you need for that round. But I think the majority of people are not in that category, including the funds here. So we come in as the fill-in, the filler. That doesn't mean that we're still not serious about our diligence. It just changes the lens on the diligence that we do and also the sourcing of our investments. So we're looking to partner with Launch and with ASV and with other partners around the state. It doesn't mean that we're not, kind of sourcing originally in the labs and in the accelerators as well. We certainly do a lot of that. And New York State has vast resources across the state. We support a number of the incubators, accelerators, hotspots, whatever the flavor of the day is relative to the naming conventions that we have, which always drive me nuts at the state. But anyway, we have a lot of resources around New York State, including the big business plan competitions, Grow New York, 43 North, Genius. There's the Hustle. There's a New York State business plan competition, and I know I'm missing. Oh, Illuminate. And so, there's a lot of funding out there that New York State puts into place and that we have good relationships with, or at least I hope to have good relationships with all those partners. And so we really are looking to work and help support any of those companies. And that's where we find our sourcing and that, but we also spend a lot of time in our own diligence process. So I was going to say what makes this a little bit different is that we also spend a lot of time just understanding the investor syndicate. That's part of our reference checking that Somak mentioned, is to understand, the quality of the investors and the investor syndicate and making sure we can get behind that. But we also do, the team and the market and a good understanding of the technology, maybe not quite to the depth just because we have a smallish team and a broad portfolio and a broad set of industry sectors. So that's why we kind of rely on our diligence around who the investors are at the table. And then the other thing that I would add from what Somak said around just kind of some of our criteria that we look to is that the product, the market founder fit, or the fit with the founder to the solution that they're solving is pretty important for us as well. So because that goes to the drive of the ability to execute, and the depth of understanding of the problem is really a lot about the founder's own experience and uniqueness with a particular solution and technology that they might be developing and advancing. So that's something that we spend a lot of time thinking about and talking about. The other thing I should say, of course, is that because I work for the state of New York and am leveraging the resources for the state of New York, you have to be located in New York State for me to invest. Anywhere in New York State, but you have to be in New York State for me to invest.
Cool. All right. So I got a couple questions. I've heard various references to market size, and actually, Somak, I'll go back to you because you started that. You offered to kind of elaborate how you think about market size. The billion number is a scary number. What does that actually mean?
Sure. Basically, what's important is it's really, really important when you're pursuing venture capital as a potential funding product We don't think of it as a product; we think of it as a partnership ultimately. But one of one of the things I often refer many founders to is a post written by Josh Koppelman of First Round. Actually, our venture partner Michael Koppelman's is Josh's brother. But Josh is a real legend in the early stage seed investing world. And one of the things he said in this post is from a few years ago is, are you a jet engine or are you a motorcycle? Motorcycles are amazing products, right? But bad things happen when you put jet fuel into a motorcycle. And that's the same thing is analogous in venture capital world, right? So, there's so many companies that could be really amazing businesses that could grow to a few million revenue, 5 million, 10 million or plus, and have a nice profitable exit. But that doesn't typically fit the model of traditional venture capital, at least at Armory stage and a Bessemer, Bain, or General Catalyst, right? So market size is one very important filter, one of the most important filters we use to say, is this something that is like a jet engine that requires rocket fuel, or is it a motorcycle? And billion-dollar TAM, the way to look at this is that we are looking for companies that have the potential. Obviously, very few get to this, and some get acquired before they hit this level. But is there a path for the company to get to 100 million in revenue in 5 years' time? ACV did that in less than 5 years' time, right? But even in case of Bento Box, it was growing to tens of millions of dollars of revenue, and it was on a path to getting to 100 million revenue. And so, if you look at that sort of model, there's very few businesses that fit that particular criteria. Now, if you then tie that to market size, it's very rare for any company to get more than 10% market share in any given market. So that's where that billion number comes from. The idea is that if your overall total addressable market is 200 million, it's very unlikely that you would ever be able to get to more than 20 million, as an example, right? And in terms of how we calculate that market size, it's much more relevant for B2B versus consumer. A consumer market size could be infinite. Every consumer wants ice cream, as an example, or this particular beverage product. That's harder to do. But in the case of B2B, it's a little more easier to be able to address what the market size is. There, what we're really focusing on is really especially focusing on the bottom-up market size, which means if you look at P as the price per year of what a company would be able to sell its software product for, and then you multiply that times Q, quantity of all the true customers that could buy this product. We focus primarily on the U.S. as a market segment, U.S. North America, so Canada is also sometimes included, is that some product of P times Q, a billion. And it's really, we're not trying to do some large like McKinsey type study. It's something that as we've done this over and over again with the data points we have in many industry verticals, we can typically work with the entrepreneur and stress test some of those assumptions. And really we're focusing on order of magnitude. Is it tens of millions, hundreds of millions, multi-billion? In the case of ACV, we actually underestimated the market size. We thought it was in the single digit billions. It turns out, it's in the, it's much, much larger than that, right? But the idea is that that's kind of what we use as a starting point. One more thing I just want to know, Ken, to Jennifer's comment about leading. I forgot to mention that when we lead rounds, we're typically looking at round sizes of 5 million, give or take, for our traditional Series A rounds. And in those rounds, we're writing checks between $1 million to $3 million. But we are very comfortable taking on large parts of those rounds. Typically, we can go up to half generally, or sometimes more. And one of the things is, as a lead, it's important that the lead not only set the terms for the round, but also has the network to be able to fill out the syndicate. We love working with Marnie and Jennifer and the groups here, but we also, one of the reasons I'm in Boston today is we work closely with numerous other funds. I'm in our Machinery Partners boardroom today to really help catalyze syndicates and other things. And so we tend to help, like when we did a term sheet with a company a few weeks ago, we set the price, we set the terms, and the round was oversubscribed within a matter of days. So we don't do a lot of investments. And so when we do investments, people notice and they know that we have experience in some of these verticals. So that's one of the reasons why you choose to work with leads like us.
So Marnie, when you talk about market size for these incredibly early stage companies, you're thinking 10 million in 5 years, 10 million of revenue in 5 years. How do you make that assessment? How do you decide this has that potential?
Yeah, and I will say we tend to err on the side of giving people a shot. So, we'll do the typical market sizing exercises, and, Somac's describing, you start looking and you use all the publicly and privately available sources. But for us, I will say that in general, it's more in the head of the entrepreneur bringing this opportunity to us, whether he or she is actually interested in going big. So, for example, we've had a number of times when consulting companies come to us, and they maybe have phenomenal technical expertise, but there really is not a scalability. They're looking for capital, but it's really not the kind of capital that can create returns anywhere near what Somak is referencing. And in our case, because our mission is yes, to build companies that are venture backable, but it's also to build the economy. So as we like to say in the venture capital arena, you're not always going to have a home run. Maybe we're happy with some of these companies that are singles or doubles. So when we think about the 10 million, we appreciate that most of these companies, if they have any revenue, it's probably from a demonstration project, or maybe they were selling software in an area that they can scale it, and they appreciate that they can do that. It could be a food product. We cover everything under the sun, battery technology, you name it, and we've got it. So for us, it's more the case of, does the market bear that this could have that opportunity? And then does the lead who is speaking to us today, who we appreciate will probably not be the CEO if this company ever hits it big, and maybe even by the time they get to Somak, there's got to be more of a management team. But we're really looking for someone who is excited about selling not just locally. They're excited about the idea of spreading the product to a much bigger geography. They're also excited about the idea that the company could exit. So I really encourage folks that are listening here that are thinking about pursuing this pathway, pair up with investors who match where your head is going, because otherwise you're spending a lot of time talking to groups who do not necessarily have interest in your pathway or how you see it. So Launch New York really is quite open, and we fully appreciate that many of our companies are going to take much longer than 5 years even to hit 10 million. So for us, I would just say we are very customized, and we're willing to spend the time. I do like to do a comparison to what I call sort of the insurance coverage for physical rehab in the healthcare space, that if our companies come in, maybe no revenues at all, there does appear to be market potential, but the company, hasn't hit demonstration projects yet, but is showing progress, we are willing to continue our resources for this company. We do pay our mentors. And so, it's not that it's costing us nothing to continue to support, but we do have some companies we've supported for a matter of years, particularly underrepresented founders going through the pandemic, had a lot of other responsibilities, so that they can start to pursue step by step. So I think we take a more of a baseline view of what that market opportunity has to be. I will say we don't need to hit the 5 to 10x. Yes, we have for-profit funds. Yes, we have fiduciary responsibility to the dozens, if not hundreds, of investors we're working with now. But we also have sort of that nonprofit venture philanthropy view that I think gives our entrepreneurs coming in the door, maybe for the first time to talk to an investor, more of a chance to have that conversation and pursue progress with us.
Cool. So I think, Jennifer, I have a couple questions for you, actually. So one is, you have, when I talk about sourcing, you touched upon it, you've got sort of this broad set of tentacles, competitions, everything from the New York State Business Plan competition, Grow, Illuminate. Do you have people in the field? Like, how, if someone's interested in working with you, how does that work?
Yeah, so sorry to sound like a government cliche, but it depends, right? Like, so for our pre-seed and seed fund, we actually have an online application portal for that, and I'll drop that into the chat if you haven't seen that before. We do that in part because it's meant to be a high volume program. I have one person running that. He's already made over 20 investments in the last year, which is a lot, right? Like for any Yeah, thank you. Somak's nodding his head. So, we're light touch on that program. It's really like getting your information. We do eventually talk to people in the process of, we talk to you, we talk to your investor, but we're not doing deep, heavy diligence. We're really relying again on the quality of the syndicate and our belief in the viability of the product and the market and the size of the market and the venture backability of it. So that one really is just coming in and putting in your application when you're ready. Part of being ready is being close to or having that matching commitment already lined up. We're 1-to-1 up to 250 on that for companies that have raised less than $2 million in all prior rounds. We do have office hours though for that program that happen every other week. And so if there are questions that you have that you'd like to discuss with the member of the team who manages that program, he makes himself available regularly. He also goes out and does speaking engagements and things like that too. For our larger fund program, our Innovation Venture Capital Fund program, really there's also an inbox, an email intake box that we monitor, but generally those referrals come either from the broad network that we have across the state. Sometimes it's from our economic development colleague in Buffalo or from an incubator in Albany, but generally it's coming in as well as us being out on the street. So we have a team of 9, hopefully 10. So if you're looking for a position in Albany, New York, and you have technical background, let me know. But we do have a team of 10 who are split between downstate and upstate, so New York City, and we're kind of spread around the upstate between Albany to Buffalo. And so we have our tentacles and fingers out, where we try to be as available as we can. So, our emails are available. Jennifer.Tegan@esd.ny.gov. So we're really happy to connect with people who are interested, especially in the later stage program. If you have a company that's raising a seed to Series B financing round that doesn't fit the pre-seed seed fund, we handle those directly with those founders once we get meet them or get the referral.
So without naming and shaming, you've all been doing this for a while. You're all, not to say you're old. You've all been doing it for a while, and you've seen good, bad, and ugly. And again, without embarrassing anybody, is there a lesson learned you could share with us each on like something that didn't work out, that could have been different, that the founder could have done differently, that you realized, after the investment, just something that wasn't what you expected, or, something that the folks with us today could take away and say, oops, I better be careful not to do that. Nothing nefarious, but just something that didn't work out. So I don't know. Somak, why don't I start with you?
Sure. No, I'm happy to. I feel like the last decade, especially leading up to 2021, was such a unbelievable time in tech and VC, right? So it was interesting how, we had our first real loss as a fund, which sounds crazy, last year, right? Like, and I think that they're definitely the markets are shakier than they were when the correction started in 22. But I think I mentioned this at Upstate Capital, and I think things are still very exciting for entrepreneurs and much better than last year. But your question is about lessons learned about how companies, what things should have happened differently. I feel like when I look at just the dozens of investments I've done over the years, I've been doing this for about 20 years. I know, Marnie and Jennifer have also been doing this for a long time. There's a lot of reasons why companies, struggle. Oftentimes it can be a product market fit issue, competition. There's a lot of areas which can become challenges for companies. But I feel the one area that I think is perhaps the biggest reason I think certain founders don't get to the next level is like just lack of self-awareness and taking, data and inputs from what the market is telling them, as well as what people on who work with them as investors and board members are telling them, right? And I think that, that I feel as you look at the difference often between first time and second and third time entrepreneurs, most of our companies that we back are first time entrepreneurs. So just so you know. But what you realize is that like the thing that makes an entrepreneur so successful early on is not taking no as an answer, right? The idea is that they don't like working for other employers. They've left their job. They want to be the boss. But there's a question that that many people often talk about. It's like, do you want to be rich or king or queen, depending on your gender? And, ultimately as investors and shareholders, we're looking for entrepreneurs who care most about building a massive company that's going to create a lot of jobs. It's going to create a huge amount of shareholder value versus being the top dog. Thankfully, nearly all of our CEOs that we back stayed with us through to the exit, but that's not always the case, to something that Marnie mentioned earlier. And so I think in general, really being able to understand, like, why are you doing this? Are you motivated to create a massive business? Or are you doing it because it sounds cool? And are you willing to ultimately, if you're going to put people on your cap table who have many years experience and can be the mountain guides or Sherpas and have been through all the twists and turns of startups, we're not always right. And we like people who are not pushovers and ultimately, speak their own mind. But I think if I look at a lot of some of the founders who, not just in past investments, but ones that I've tracked that didn't make it, it's often been a lot of those wounds have been self-inflicted as opposed to coming from the market because of not listening to what customers were saying and what people in their networks or investors were saying.
Yeah, well, that's a great lesson. Jennifer, thoughts on one that didn't work out?
I agree with Somak. It's been a really interesting time, and I think that we had some great wins, 21, 20, late 21, 20, heading into 22, and then it's turned a little quite brutal over the last year, and definitely had a lot of companies who just haven't been able to raise additional capital and have had to to close doors or to sell or be acquired at basically nothing and no return to at least not yet. So I think my lesson learned from that period, I mean, there's always lessons learned from every company that doesn't make it. There's lots of lessons learned from all the ones that do too, right? But I think during this period, it's been super interesting to really, again, get back to fundamentals and basics and make sure that for every dollar that you're investing and plunking down into a company, that there's real possibility of turning that dollar into something that's going to move the needle relative to their revenues or the market or the product, and just hunkering down on making sure that the company is as efficient with the resources that they have that they can be. Now that's not made enough of a difference for some of them, but for the ones that have been able to really think deeply about who they need and what they need. And I remember early on in a company that I had worked with, we talked about, there's a time when you cut flesh, and then there's a time when you actually are going right into the bone too. And the last year has been about going into the bone, not just cutting flesh, to be graphic about it, but you really, it's been incredibly important to stretch as far as you could in order to hit key milestones and to have metrics that are, are of interest to what your market and what your industry and what your sector is showing and seeing. But back to kind of my pandemic, the one of the companies that I originally thought going into the pandemic, of course, the pandemic changed our view on so many things. And we went in thinking this one company was going to change the world for, kind of mid-career women and networking and coming together and helping them to identify and set goals and have accountability. And it still is and was a great opportunity. But once the pandemic kind of began, people wanted to be doing things more in person. So the virtual world became, things, people taking time to do those because life got more complicated and busy again. And I think that, the lesson learned there was that short-term filter of, what seemed possible and really important at the time quickly changed. And, the company tried pivoting, but it just wasn't, it really wasn't in the cards for them to be able to make it long term. So they ended up kind of selling what they had to another related company, and hopefully those assets will be useful to people still, but probably not in the market moving way that we had originally had thought that they might be.
Cool. So let me switch gears a little bit. Marnie, we talked with everybody about, the diligencing, how you source. What is your expectations at launch post-investment? Governance, board seat, reports, frequency of, beyond just the pure regulatory requirement, what's the expectations of Launch New York for a company Launch has made an investment in?
Sure. And Launch has, had to create an infrastructure for very high volume. So we're mentoring over 350 companies annually. And then last year we made 36 investments. So, and that was probably a lower year for us in some respects. So, for that, as soon as a company comes into the mix, these factors that Jennifer and Somak are talking about, the coachability of the entrepreneur and their willingness to engage in that follow-up, because it's really critical. And it's not simply just to get reporting and report numbers. It's also to monitor and support that company during the portfolio management phase. So for us, we are generally requiring financials every month. And by the way, most of our companies are really struggling at that point with how they're even preparing financials. So I would just say one of the key lessons we've learned with all of the reporting that we have, as others do, is that we've got to get that entrepreneur to be willing to work with service providers and understand that that's money and that's resource that has to be expended in order for you to run your business and build your business. So we do get those monthly financials, and then we are generally getting, for most companies at that early stage when they've first been funded, they're providing us quarterly updates on the progress of the company, which would include revenues. Many times there aren't any, how much money they have raised from others, as well as jobs. Plus, we're getting all the qualitative and kind of process measures, any new intellectual property, any demonstration sites, any strategic relationships. And I can tell you that one of the things we're seeing in companies that have a very coachable, adaptable, resilient kind of entrepreneur is they're forging relationships with strategics very early. And it's because they are open, and those strategics aren't, writing them a check from the first meeting, but they're saying, we're very interested in what you're doing, and we may come into a next round with you. So keeping those balls all in the air while you're getting the data over to your investors and making sure your investor relations are good, because those folks are generally going to be looking for your current investors to do a follow-on. So right now we are audited, so we need to show that, for that purpose too, that we are actually providing that kind of quarterly support. Because of the type of vehicle we use for investment, which is generally a convertible debt note with a maturity date, we usually will do a 24-month maturity on that first debt note. With that, the company should be aware that, hey, I'm coming up to a point of maturity on my note. And if I haven't gone to a next round of fundraising, which really is our goal, what is my plan? And I should be providing this information to Launch New York and to the other investors so that those individuals are traveling this journey with me. So we will dig very deeply into everything that's going on, but minimally companies should be doing that kind of basic reporting. I would also highly encourage and be prepared for.
Oops.
If you can do it monthly, great. If you can only do it quarterly, minimally, that's what you should be doing. That is my favorite thing to receive. And even offering webinars where you have everybody meet up. We have a number of companies. In fact, we have a pitch today where we have multiple investor company on a bridge round. If we don't know what's going on, we just are in no position to assist. So that reporting piece is really important. And we do actually put that in our side letter, if not in the main documents, if we're leading the deal, that those are reporting requirements. We do, by the way, fully appreciate that as the companies move to a next funding round, Launch New York becomes that piece that was small in the beginning, maybe not as big going forward. Although now we can put more substantial dollars and even lead around that maybe is in excess of $1 million. As far as the governance piece, Launch New York, given the volume, we've invested in over 90 companies since 2016. We do not currently take observer or board seat position through our documentation or even functionally. We really use the reporting rights as our method to make sure that we're keeping in close touch with the companies.
Cool. So Matt, let me ask you, and I actually want to build on that question a little bit. So yeah, what is your, what governance role do you play post-investment if you all take board seats? But one of the things we're often, those of us in the mentoring side are often coaching teams is that establishing a relationship, starting regular communication so that by the time you're asking for money, the team knows who you are, they've been following along. Is that actually good advice? Or, I mean, is that just sort of flooding your inbox? Or do you want to hear from companies well before they're looking for money so you get to know them? So that's part A, and part B is, your governance play.
Sure. These are great questions. Let me start with the question of, do we like to hear from entrepreneurs before they even raise money? Absolutely. Pretty much every investment we've ever completed at ASV was a relationship that we normally had started at least 6 months to a year, sometimes years earlier. And that's helpful for us to develop that relationship, to understand, when they're at Marnie's fund stage, okay, they're still figuring out, when they're going to be able to launch a product, but we can be a sounding board. We can start introducing them to people in our network. And as they hit certain goals where they're ready for us, we already have started to see when they hit goals, when they set goals, if they actually can meet and exceed those goals. So we love meeting earlier within reason. Obviously, our day job is also working with our portfolio companies, and helping our board. So we can't be on the phone like every day, but having regular touch points whenever we're passing through your city or as you're coming into Syracuse, we do want to find ways that we can collaborate and show you how we can deliver value to deserve a spot on your cap table. And I'll tell you, it does pain me sometimes when I see certain entrepreneurs in upstate who had met with us earlier, and then they ultimately chose counsel or worked on developed a structure that made them ultimately completely unfundable. And I sometimes wonder, look, we're here as a resource. Yes, we are investors, but we're here to really help you in this region and community, and to be your Sherpa and guide, and connect you to other people outside this region. So please, we always, even though we're busy, don't hesitate to send an email. I'm Somak, SOMAK at armorysv.com. And if I can't answer it, someone on my team should be able to answer it. And we're here to help, right? And if it's not a fit or we can't help because it's outside of our scope, we'll tell you that. In terms of, how we get involved post-investment from a governance perspective, since we lead investments, one of the reasons why other co-investors often come alongside us is because they know that there's someone here who can really play a lead role, not only in setting the terms for the round, but will be actively involved in supporting that entrepreneur post-investment. So we have a board seat, or at least an observer seat, especially as the company grows and say raises more company, and they have to keep the board members, certain number of board, will maybe roll to observer. But we have that type of governance structure with pretty much every investment we're part of. And so we take our board roles very seriously. And one thing I would just say, and from a communication perspective, communication is clearly important, Ken, as you said, before you invest, but it's also extremely important after you invest, right? Because when we're investing, we're planning not only to write the first check, but we're going to be, interested in being able to do our pro rata amounts in future rounds and be able to help raise the capital. So it's important that you have continuous touch points, like what Marnie said. We generally do very regular check-ins every few weeks with our companies. I'm in person with one of my portfolio company boards typically at least once a month. And I also encourage all of our entrepreneurs, even though we have distributed platforms like Teams and Zoom, please do make sure you spend time in person, not only with your team, but with your board members, and make sure there's rapport and chemistry across the board too. We also try to focus on getting independents who can really be a nice, intermediary between investors and founders. I think that helps create a high functioning board.
Cool. Thank you. I appreciate that. So let me see here. There's a couple other questions I wanted to. I lost my note for a second. All right. Sorry. Sorry, I lost my place. So Marnie, I wanted to ask you something though. Give you a chance to promote the Investor Network. So could you explain what the Investor Network is?
Sure. So Launch New York has a nonprofit fund fed by grants and donations. We have a for-profit fund, and I'm super excited. We actually did our first investment from LP Fund 2, and we're super excited to have New York Ventures as part of our fund, as well as almost 68 other limited partners, including the likes of MetLife. So we've made our first investment from that as well. So these are the process I described, where companies are coming in, they're applying and pitching our investment committee, and then we're making decisions of the configuration of funds coming from those pooled dollars. In addition, we have an investor network, which actually is very unique in the US in the sense that a limited geography has developed essentially a angel syndicate online. We have over 300 accredited investors who have said, yeah, maybe I want to be in your funds, but I'm also really interested in doing direct investments in companies I really like. And so we made it possible for individuals to do this completely virtually, but essentially see our companies. We currently have a battery technology company backed by Nobel laureate out of Binghamton University, a company called Dimion, and we just raised for a fintech company called Veravend about $125,000. But the really neat part for individual investors is Launch essentially does all the work, assembling the data room, providing it online for access by these investors who can put as little as $10,000 into any given deal. Launch then aggregates that in an LLC known as a special purpose vehicle, and we manage that entire investment for its lifetime. So to date, Launch New York's done 20 of these SPVs since we launched the product a few years ago. And generally, we're doing a number of these each year. And it really gives upstate New York oriented investors who may be located anywhere, by the way, but they love the area. There may be expats, maybe they went to college here, but it gives them a chance to invest in deals without having to be on site, without having to be part of a angel group that maybe is just meeting and doing a lot of in-person. So it's very unique in a way that we really are supporting what we call invest local, because we appreciate that the purpose of a lot of what we're talking about here is to make sure that you entrepreneurs don't have to leave this region to build your scalable business, and that you don't have to let your great ideas die on the vine.
Cool. All right, I'm going to give a lightning round very quick for each of you. I'm going to start with Jennifer, and I didn't prep anybody for this one. What do you see coming up? Do you see any trends, new industries, new opportunities? What do you see coming up in the next, year to 18 months?
Oh, dare I say AI? I mean, everybody is, of course, talking about AI. I'm government, I'm cliche now, right? So no, I mean, I will say I think things are beginning to feel like the aperture is beginning to open again. There's more appetite for looking at new deals, investing in those that have been successfully through the downturn that we've had. So I feel excited about that for the coming year. I still think things are going to need to be cash efficient, and there's a lot of down rounds happening as well. So there's definitely still some reckoning happening in the market, but I think I feel optimistic. right now relative to what we're seeing. And then I'm seeing a lot around social impact, but I think that's also just because of the lens. I get excited to see so many, cool innovations and people who really deeply care about the impact of the innovations that they're creating on either the climate or on people or on health and well-being. And so that drives me out of bed every morning to help people who are solving such huge challenges and problems generally.
Go for it, Somak.
What do you think?
Just my views of what's happening. For the next year, I made a presentation about this in Buffalo a few weeks ago. I'll put this in the Zoom, but I truly am more excited and optimistic about what's happening in industry, than I have in a very long time. As Jennifer noted, 23 was a difficult year. Thankfully, we emerged relatively unscathed. But when we look at, you'll see in the presentation link if you have a chance to view it. We're focusing on a few big themes this year. Of course, AI is ubiquitous in every technology company we see today. I noted in the presentation that when Kleiner Perkins called their first fund an internet fund, that's really what AI is today. It's really a critical part of every piece. We're not focusing on LLMs. We're focusing on ways that you can apply technology, which includes AI, to specific applications, often in old line industries like manufacturing, construction, transportation, other industries that are very core to places like upstate New York. The other area that I'm really excited about is just, from industry sector, we've invested recently in cybersecurity. We're obviously very bullish on digital health, transportation, logistics I've mentioned, and just more broader theme is just talent migration trends. The pandemic really saw an uptick of people coming into regions like upstate and other secondary cities. This is something that's growing with the investments of Micron and Global Foundry and other big, larger tech investors. And I think that's going to create huge opportunities for companies as well as a new set of founders, a new generation of founders in our region.
Cool. Marnie, you get the last word.
Okay, well, it is Women's History Month, so let's just wrap with, women are still sitting with less than 2% of the venture capital. It actually went down during the pandemic, in terms of the startup investment scene. So we are going to bust out. So I am going to encourage everybody. In fact, there was a great question about building team. If you don't have a diverse team, think about diversity on your team. Most funders are looking for that now, and they are looking for all the basics, and everything else that Jen and Somak said really holds true. But this is a phenomenal opportunity right now for more diverse teams to really be busting out. And just want to say congratulations to so many women-led businesses that now are comprising about over 50% of the capital that we deploy are women leading those companies. So keep going.
Thank you. So thank you all. Really, it's a pleasure to get to spend an hour with you. Thank you for your insights, and just thank you for your time and for everything you do for startups. I'll just do a couple slides very quickly. For those of you who are startups, there's a Cornell-led competition, not just for Cornell companies. The Ben Daniel Venture Challenge, which is going to take place in April. If you're interested, there's a QR code here, and we will share this deck. If you're doing hardware products, we got a 10th year of our summer hardware program. We'd love to see you here at Rev for the summer working on your hardware idea. Grow New York is now accepting applications for their next competition. And the next competition will be hosted in Ithaca for the first time at the new conference center. This is an awesome $1 million first prize competition that you've heard all of our folks today talk about. So if you're anywhere in the sort of ag food space from the beginning to the end, this is the competition for you. If you're an aspiring entrepreneur, think about joining an NSF I-Corps regional course and sort of getting going on that customer discovery path. We're doing these all of the time. We have a specific one coming up for energy researchers, of course, hosted at Binghamton, but these are going on all of the time. We have a presentation coming up in a couple of weeks on building your team. So those of you that are, maybe getting going already, this is a great presentation to sort of some of the things you need to think about. And you heard all of the folks mention, it's rarely a solo founder. It's usually a team, but that team often comes together once the company's there. We have an event for those of you in Ithaca. We hope to see you here at Rev April 10th for our Campus to Community Connect event, networking night. So please come drop by on April the 10th. And lastly, one of the great sources of funding before you have to give away any equity to any of these folks is SBIRs and STTRs, which are government dollars from many of the agencies that are very, very focused on bringing innovation to market, especially university level innovation. Lots of companies in our ecosystem of upstate New York have been awardees of SBIRs, and it has helped them immensely. So thank you again, all of you, for your time. It was a pleasure to have you all. Thanks for those of you that attended, and we will see you all again soon. Take care.